Now, people that are long-term investors, which we should be a hybrid of anyway, we don't really care in that aspect when the stock market comes down because we want to get stuff for cheaper, right? We don't run from the sale. We don't run from the stock market sale. Us folks, right? People that's tapped into rapping dough and know what's going on. We don't run from the stock market sale. But when we're trading, it's a whole nother animal, right? So there's no way to be 100% right when you're trading for reasons like today. So you can have all your levels, everything can be lining up. And I'm going to show you on the chart. And then some news can come out that you cannot control. So you have to be nimble, right? And being nimble entails for you to know different things to do when different things happen. And this shit happened before. Like if I was tapped in last week, I got caught on the wrong side of the trade, but I fixed it immediately. I don't know if I talked about it yesterday or not. Fixed it immediately and got on the right side of the play. Made all my money back and some. That shit happened today again, y'all. If y'all any plays and y'all woke up this morning, y'all seeing that the market gapped down. It gapped down overnight because of that news. The inflation news came out. So let's get into it. Inflation news came out, and that tends to scare some folks. Well, basically, when inflation increases, that means companies that borrow a lot of money to grow their business, and a lot of times it'd be tech, growth companies. Now they have to pay more because the interest is higher. The interest rate is higher. So now they have to pay more on their money that they're borrowing. They have to pay more interest. So what that does is subtract from their bottom line. When you take away from the company's bottom line, that takes away from the growth aspect of the company. So if someone is investing in a company for growth and the growth is stagnated for whatever reason, they want to look for other opportunities for better growth. So when these CPI numbers, which stands for consumer price inflation numbers, come out, that's one of those inflation numbers, right? So people head for the hills. Stocks come down. But that news came out early this morning before the market opened. So before the market opened, it did this. It dropped a whole $10, right? Right before the market opened. So if you was in plays that was poised to go up, let's look at the daily. Because you want to look at the daily. All time frames matter, of course, because they all are relative to each other, depending on what you're looking for. So here, let's start at the weekly just so I can give you some backdrop on that. So here we can see that on the weekly, price came down and went up to, here we go. What's today? The 13th. Yeah. So this was this is a weekly chart. Okay, that's why. So we see on the weekly that this red bar is approaching it hit a resistance, but that's not the weekly resistance. Let me draw the weekly resistance. Each time frame has different levels, as y'all have probably been coming to learn by tapping in here. So the weekly says that we can get an eye of what's going on in the near term or what could be happening in the near term by looking at what the weekly says. So that's a weekly resistance. This is a weekly resistance. Looks like. Yep. That's a weekly resistance. All right. So it looks like we came up into another level of resistance here on the weekly. All right. Came down and stop right here. Boom. I'm gonna leave this joint right here. I'm gonna say that's it right there. That's the level. Boom. So that's what the weekly levels look like, right? So according to this, we have a new low in the MACD. All right, but slow line is curving up. New low in the MACD. This is not looking too bullish. All right, it's not looking too bullish. Like it's not convincing. All right, so let's drop down and see what we see in the daily. So what do we see on the daily? Now we can see a little bit more into what was going on in that weekly bar. So one bar would be 5 of these. So 1, 2, 3, 4, 5. It'll probably be these. These right here was one bar. So you only seen a red bar on that weekly. But now in the daily, you see the integrity of that red bar. You see there was some buying and then a gap down, which was today. Yeah, we were psyched up about this, but you always should be leery about 3 or more uptrend legs. Always be leery of 3 or more uptrend legs or 3 or more downtrend legs. If you can see it, you can count them like 1, 2, 3. Look, 3 or more. So here go the fourth. Look, retracement. It played with the level, right? But that's still where it slows down. After 3 or more, start side-eyeing a play. And here's a quick caveat, y'all. This is the daily, but if price breaks a resistance and then heads up to another resistance and doesn't reject, like price doesn't reject violently, but it hugs the next level, that's always, a lot of times out of 10, high probability that it's going to break. And the same for the downside. If it's hugging support and it doesn't reject, like if it goes down to support and it doesn't reject up, but hugs it, that's indicative of a breakdown. So in the daily, we also see a low in the MACD and the sloping down of the slow. So we got the new low in the fast and sloping down of the slow. That's not bullish, right? That is not bullish. So what I see is this continuing down, possibly to 387. But the next very visible level, I mean, this is a level. This is definitely a level, but it got a couple more dollars to come down. So I see some more downward pressure here. With that news that came out today, like it just took this dive here, which was like if you was looking, you can see that it's overextended here, like to the upside, and this resistance level, 1, 2, 3, 4 bars. Start look side eye in a play after 3 bars. Like at least start taking profit, not taking all your profit. 3 bars into a level, going up into a level. It's time to start. You know what I mean? Don't be greedy. So here I see more downward pressure. So let's take it down to the trading time frame, because this daily bar has a lot going on in it, but you can't see it in the daily bar. So let's drop down. Just like you couldn't see what was going on in the daily from the weekly, you can't see what's going on. And this is 6 hours worth of trading in this bar. So let's drop down. And these are the bars that represent that one daily bar in the 2-hour time frame. So in the 2-hour time frame, we also see weakness, new low, and curving of the slow. New low of the fast, curving of the slow. That's weakness, right? So I see more weakness coming in tomorrow, and to possibly slow down at 388. So yeah, that's what I see. That's what I see, y'all. And let me drop it down one more to the relatable. Yep, even in the relatable. Look, it closed inside the level. So it's coming down here tomorrow. New low in the MACD and the relatable as well. Look, all these signs line up. The slow is down and the fast has a new low. So I see this coming down to 388 tomorrow. Based off of all those parameters that I put together. Keep it simple. Keep it simple. Yeah. That's what we got, y'all. That's what I got. It's Cheef and Chart, man. It's your man, Don Bucks. Make sure if you want to learn how to swing trade, hit the description. And if you haven't already, hit the notification bell for when your boy go live. Always remember, it's no competition. It's only you versus you. See y'all tomorrow.